U.S. stocks ended lower on Wednesday as technology shares declined, with investor jitters stoked by weak demand in a 10-year Treasury auction. The Dow dropped 0.6%, the S&P 500 shed 0.75%, and the tech-heavy Nasdaq lost 1%. The indexes started the day higher but began to lose steam in afternoon trading, paring gains further after the Treasury auction. A steep global stock sell-off earlier this week rattled investors who have been worried about a possible U.S. recession and weaker than expected forecasts from U.S. companies. But George Ball, chairman of Sanders Morris Harris, said that recessions are cyclical and, in that regard, not necessarily cause for major concern.
We've been in a prosperous phase for a long time. The odds start to stack up to a 50-50 chance of a recession with stock prices and multiples of earnings comparatively high as of this point. So it's a cautionary time, not a panic time. And the Monday sell-off, I think, was more of a stock market financial phenomenon than an economic or one that has some longer-term significance to it.
Stocks on the move Wednesday included Walt Disney, down roughly 4.5% after it predicted a moderation in demand at its theme park business in the coming quarters. Shares of fellow entertainment company Warner Bros. Discovery ended the session higher, but tumbled more than 8% in after-hours trading after missing Wall Street expectations for quarterly revenue. And shares of AI high-flyer Supermicro fell 20% after the server company reported quarterly adjusted gross margins below estimates. Rival Dell dropped more than 7%.